Do not try and bend the spoon. That's impossible. Instead, only try to realize the truth.
What truth?
There is no spoon.
There is no spoon?
Then you'll see that it is not the spoon that bends, it is only yourself.
The Oracle will see you now.
What is going on YouTube? It's Brendan from Market Makers. Guys, big news in the market. A U.S. credit was downgraded for only the second time in history. Pan sell-off. Everything started selling. The VIX spiked up. The dollar spiked up. We got to cover all of this information, as well as I want to talk about what's happening right now with inflation that nobody is talking about. Nobody is talking about. But guys, the reason for that intro, the Matrix, in case anybody's wondering that hasn't seen the movie, you're trading in the market matrix, okay? The matrix in the market is all about manipulation. And what you can do by understanding the business cycle, the economic cycle, technical analysis, it allows you to see the coding, the writing on the walls, so you can understand what's happening before it happens. That's why you're going to hear people say, well, this was a real black swan, what Fitch did. Well, SVB Bank failing, the second largest U.S. bank in history to fail, that was another black swan. Is it a black swan if you knew it was going to happen? No. Black swans are unforeseen events. If you understand that we are in a bubble cycle, if you understand the whole market is based on manipulation, not my words, go back to Charles Dow at the inception of the market, Richard Wyckoff. That was the whole point of understanding the markets. It's completely manipulated, because if you think Rivian, for example, the electric car manufacturer, before they had even made a car back in the bubble bull run, before they even made a car, their value of the company was more than GM before they even made a car. And so you could say, well, I mean, yeah, but that's, you're trading on future earnings and what the company could be. Yeah. And then you know what happened to the Rivian stock? Dropped 90%. You see it in cryptos, you see it in stocks. If you understand you're in a Ponzi scheme, you can navigate the Ponzi scheme, okay? Because nothing is worth more than people are willing to pay for it. Tesla got up to a 400 PE, 400 plus PE. You're paying 400 times price on the earnings of the company. You would never do that in anything else in your life. But again, the market is human driven, emotionally driven. And if you understand that, you can see through the surface layer, see the coding of it. You can follow the big money and make money up and down. All right. So let's talk about Fitch. Guys, apologize for the lighting on my camera. My light source went out. I have to buy another one. I'll have it for next video, but it's the best I can do. It's cloudy today, and these lights for some reason aren't extremely bright. So Fitch is a credit rating agency. For only the second time in U.S. history, our credit was downgraded. I find it extremely apropos and fitting that Joe Biden is the current president. Our credit is downgraded. In 2011, the only other time our credit was downgraded, Joe Biden was the vice president. Now, Fitch cited a couple of reasons, a couple of key reasons, I'm sure they have multiple reasons, as to why they downgraded our credit. One is our debt to GDP ratio. So the other 9 countries with the highest credit rating, they are all average 39% debt to GDP. The USA is at 120% debt to GDP. 120%. Absolutely mental. They also cited the likelihood of the U.S. entering a recession. Now, juxtapose that, what Fitch said, what I've been telling you, what other people have been telling you about a recession is 100% certain, but juxtapose that, President Biden, no recession. Janet Yellen, Treasury Secretary, former Fed chair, no recession. Powell at his last press conference. We see the path for a soft landing. Our staff has removed the idea of a recession for the U.S. economy. I mean, this is like a flashback to the GFC. See, I was at Merrill Lynch for the GFC, and Ben Bernanke went before Congress and the American people and said, we don't have a forecast of a recession. We foresee a soft landing. The housing market is merely a reflection of a strong and robust U.S. economy. And then we had the greatest financial collapse since 1929. These people are morons. They are part of the matrix. You need to understand that, okay? The way you navigate these markets is understand the macro, understand the business cycle, understand the technical analysis of the market. If you do one or the other, well, you're going into battle with not as good of weaponry. You want to be fully armored up with a weapon. Understand both sides of the coin because these things matter, guys. So let's go ahead and one thing I want to show you guys. So this is a clip, right? This is before the market dumped. This is a clip off of Bloomberg. It's a montage Lee does here. We're going to go ahead and play our montage. And this is what they all thought of the credit rating downgrade. We'll talk about it on the other side, guys. Lee, run it.
Live from New York, coming up, the US stripped of its AAA rating by Fitch, the White House scrambling to stem the political fallout as market participants line up to criticize the move. We begin with the big issue. Here we go again. More than a decade after S&P Global Ratings stripped the US of its highest credit rating, Fitch making a move of its own. The rating downgrade of the United States reflects the expected fiscal deterioration, a high and growing general government debt burden, and the erosion of governance. Secretary Yellen pushing back, calling the move arbitrary, outdated, adding, quote, Fitch's decision does not change what Americans, investors and people all around the world already know. That Treasury securities remain the world's preeminent safe and liquid assets. Prominent economists elsewhere piling on the criticism. Mohammed Al-Erin labeling the downgrade a strange move. Larry Summers said he can't imagine any serious analyst giving the decision any weight at all. And on Wall Street, a whole host of guests echoing that sentiment.
The Fitch rating downgrade came as a surprise.
A little bit surprising.
A bit of a head scratcher.
Clearly it's not good news.
It's never good when a rating agency says, okay, we don't like your debt as much as we used to.
I questioned Fitch across the board, and particularly the timing.
This comes at an economically sensitive time.
Politically, I think it is bad news for Biden.
The last thing that Yellen really needs.
From a market's perspective,
the market took it on quite well.
The initial market reaction, pretty moderate.
The whole response has been fairly muted.
The main question is, does this compromise the reserve currency status of the U.S. dollar?
There really is no viable alternative.
One never wants to forecast the demise of the dollar.
This probably doesn't really move the needle.
It doesn't seem to kind of create any market disruption.
That's right. It's a shock. It's a surprise. But I mean, where else are people going to put their money? It's still the best country in the world. Guys, understand when you watch YouTube videos or you watch people in media and they use terms, nobody said it there, but when they use terms like black swan as an unforeseen event, if you understand the business cycle, I'm just going to keep harping on that. If you understand that we are in a bubble cycle, you would be expecting bank failures. Second largest bank failure in U.S. history, March of 2023, SVB. Go back to March of 2008 with Lehman, and then with Bear Stearns, and then you had Lehman in September. You're going to get bank failures. You're going to have financial crisis. We had a historic yield curve inversion, as well as inflation like we had stuck and stagnant in the 70s. And you have a lot of stimulus still floating around there. And when that drains out of the system, guys, it's going to be epic what happens. But let's jump into the TA so you guys can see this. All right, so the VIX spiked up, as you can see. We were down here in the 12s and 13s. We spiked up all the way to 1742. You can see just jumped right above the 50. And the VIX will do this when it gets excited, have explosive moves. So I fully expect at some point in this cycle, we will have the VIX hit 80 again, or definitely above 50 to 60 and have a massive dump at some point. And that will come with the realization that the U.S. is going into a recession. There's some key news events that are happening. I want you guys to be made aware of this. I was tweeting about it yesterday as well. But today is Apple and Amazon, okay? Apple, now maybe you just trade Bitcoin and you don't think you care. Apple and Amazon have almost a 20% weighting of the NASDAQ. So they're reporting earnings after the bell. If those earnings are bad, you can see the market have a strong bias to sell off further. If their earnings are good, we could be holding our support level and start drifting higher. However, the next key thing after that is August 10th, inflation. Now, I know almost nobody I've seen is talking about this on Bloomberg. I watch Bloomberg every day. Almost nobody is talking about this. And many of your friends, probably, maybe some of you, don't even realize this is the forecast. So Cleveland Fed does their inflation nowcast. I don't think most people know this. So last month, our CPI was 3%. Headline, right? It's expected to go up for July, 3.42, and then August, 3.87. So inflation is supposed to rise, okay? And that's because we had a historic drop off with energy prices that really contributed to the inflation number coming down. And what everybody's talking about, the base effect. The big numbers of inflation fell off. So when you're doing year over year, now you're starting from like ground zero. And now you're seeing the inflation. This is why the Fed didn't want to say they were done raising rates, because, of course, with their 400 or 600 PhD economists, they had to have known to expect this. But does the market expect this? That's the big question. If that number comes out, last number was 3%, and let's just say we get 3.5%. What do you think happens? I'm asking because I would think the bias would be to sell off, but we shall see how the market reacts and how the media tries to paint it. But you have the next 2 months, inflation is expected to rise. And this is going to happen because inflation, in my opinion, with where the Fed funds rate is right now, it's not at a restrictive enough level. It should be higher. It should be above 6%. According to the Taylor rule, right now, rates should be above 7%. But they're trying to drag this out and bring inflation down slowly, because this is a presidential cycle. Elections are next year. If they do anything too fast, you can see the market absolutely crater and collapse. DXY did pump up to the 618, 102.743. Look at this rise, found resistance. So because it found resistance, you're going to see the markets basing. Looking at the Dow on this historic rise up almost broke the record going back to 1897 for 14 days in a row up. And of course, I Kramered it and the Dow fell. And the Dow's at 35,268, holding support right now. We'll see if it can hold here. And again, watch Apple and watch Amazon tonight, not because you're interested in what the actual numbers are. The market reaction to their numbers is going to be really key to see what happens. Because remember, all the big money flows together. Key pivot date on all the indices, August 14th. August 10th CPI, August 14th key pivot date. Let's go ahead and move forward. S&P here on our gummy worm, you can see we pumped up and now we went down, and I shorted the S&P in the room. We'll look at that on the other chart. I tweeted about it, 45.92. Got it. Awesome. I mean, originally I was thinking it was going to be a scalp. I was thinking 20, 30 points, and then it just fell apart with the Fitch news. 44.85. 44.85 is where we went down to. You're at 45.08. Again, key pivot date, as you can see, August 14th is coming up. So shorted it up here. Why? Because we have the channel within the channel, and we hit the key trend resistance, also Fibonacci resistance. I want to throw too many things on here so you can see everything. The 2618 was 45.99. Okay. So what you're trying to do, look exactly where price bounced off of 44.86. You see this? You want this candle, the candle body, to close as high as possible on this. You want this to be a climax candle, a doji, because what I think is going to happen in the S&P, I'll just draw it. If Apple's numbers and Amazon's numbers come in better than feared, is how they like to phrase it, because remember, they lowered all of their earnings for the S&P. But if they come in better than feared, and people believe that this is a great buying opportunity, you got Tom Lee, you have all these people out there, new all-time highs this year. I want to see the rebound, because this can give you a macro double top, a new opportunity. If inflation comes out on the 10th and it's hot, you could see this thing reverse quickly. So I want to see where this gets to, but that is the potential next big trading opportunity. So let's go ahead and move forward. NASDAQ, and then we're going to jump to Bitcoin as well here, guys. So thanks for being patient. I know a lot of crypto people just want to see Bitcoin. So NASDAQ, what are we doing? Well, if we look at the NASDAQ, we got to the 2618, 15,845. And the key thing here to see on the NASDAQ, let me show you this here on the NASDAQ. So here's another fib layout. The 2.058 was 15,931, nailed that almost to the dollar. Let me zoom in so you guys can see this, okay? Because you got to watch this tonight with Apple and Amazon. You need to watch 15.3-ish, okay? Because what you have here, let me remove the fib. What you have here is essentially a pivot. Let me show you. So you essentially have this pivot right here. This is where price found resistance multiple times, broke through it. This is now a key support area, which is exactly why, even without fibs, you bounced right off of it. This is a macro double top here on the S&P. You see your double top, or I mean on the NASDAQ. If Apple and Amazon are bad and the market doesn't like that, combined with the Fitch news, combined with the potential for the inflation to go up, you could see this get broken through. And if you sweep this pivot, then you're looking down at 14.7. You sweep that, there's a long way to go down, guys. This could be catastrophic if this confluence of events plays out all negatively. If earnings are good for these two companies, I have no insight. Nobody knows. That would be insider trading. But if these two earnings are good, again, looking for a rebound back to the upside, okay? So let's look at the upside potential real quick, just off of this lower peak here. See where we could get to 618, 15.6, one fib at 15.8. Okay, those would be the areas I'd be watching here. Beneath that 14.5 or 15.5 essentially is between the 382 and the 486. So that's what I'd be watching, but definitely watch this level 15.2, 15.150, 15.3, because that's where your pivot is. And if you break this, you're dropping further, putting you back in this previous Wyckoff trading range. Very important to watch that. Money flow was bearish all the way over here. So again, you built the top. Remember, declining volume the whole way up, you build tops. You build tops. Momentum's down. Money flow turned bearish. We'll see if we can hold this base. And if we look at, what do I have, two of the same chart up here? I think I do. This is a zoomed out view. But you look at this, again, it's the same thing on the S&P, not to bounce back and forth, but same thing on the S&P, except your pivot's lower. Your pivot's down here. So let me go ahead and mark that so we can look at that really quick. Looking at basically 44.59 and that range, so the S&P could drop. This is your key support area, your previous Wyckoff structure. You break through that, you're back in that trading range. And that bottom of that range, guys, is all the way down at 43.20. Okay, 43.30. So you want to watch this because you want to see if the S&P can rebound. And let's just quickly cover the Russell. The Russell was the least affected. It did sell off. It did come down. It was up at 2005 and went all the way down to 1947, as you can see. But again, trying to hold a support, you do have a kind of a disjointed double top. You're in a Wyckoff range chopping around. Bitcoin held up pretty well too. Again, our competing patterns, the bullish case, if the markets are to hold support, if they get more bullish, if they believe all the hype and everything, that the Fitch thing doesn't matter, business cycle doesn't matter, the business cycle has been repealed, no such thing as a recession, we'll never have one of those again in our lifetime. Well, we have upside here to 34,770 and 39,791. The bearish pattern was up here as well. This is an asset we constantly trade in and out of in our room. If you guys want to check out our Discord, highly suggest you do. Link is in the video description. If you want to try out a trading exchange, check out SimpleFX for equities, cryptos, and commodities, and a up to $5,000 instant deposit bonus only with our link. That's in the video description. And so is BingX for all the cryptos. And both of them will pay for your first month membership in our room. So consider checking them out. Sports the channel if you do want to partake and trade this market. But when we look at this on the daily, guys, and I know I'm not covering a lot on Bitcoin because you look at the candles, I mean, you're in a very clear range here between 28,875 and 29,797, and you're bouncing up and down. Okay, so I mean, on the bigger picture, zoomed out TA, you're bouncing up and down again at a safe level, the 382, 28, 875. Danger zone is getting to the 618, falling below the 618, and doing something like that. That's the danger zone, okay? That's more of a reversal because then you're coming back down to the bottom of your range, down at that 27, 750 area where you would be breaking down further. And if that happens, that's because the markets are dumping. So let's look at the money flow and everything here, and then we'll wrap this video up, make it a short one for you. I do have the commodities and the European indices, so hold on one second. But looking at this on Bitcoin on the daily, you're back in a positive territory. Momentum's still negative, though, and you can see it in the price action. Let's look quickly at the euro dollar. Nothing new to report. Trying to hold the 1.0928. Okay, that's what you're trying to hold with the dollar rising. Again, higher lows still intact, but you start sweeping this valley here, 1.0833, then you have another low coming in, okay? And you break this uptrend. So watch that if you are trading Forex. Gold sold off as well, but gold is trying to hold its base. Everything's trying to hold its base. Gold at 1933. Key resistance remains above you. Again, head and shoulders pattern on gold, but higher low structure also in gold. Remember, it's going to move with the markets. Sold off with the markets. If the markets rise, it will rise with the markets and eventually sell off dramatically. Silver had a much more dramatic sell-off. You're down at 23.54. And again, that key resistance was 25.27. Head and shoulders pattern, X5 Fibonacci pattern. Lots of patterns here, but higher low structure still intact as well. And that's where the market is. Let's look at Tesla. Tesla fell some more. It's down at 255.97. Your key resistance is still 268. If you can get above 268, then you're back in that 268 to 299 range. But again, upside potential, I think, is very limited with this business cycle quickly moving towards recession. And again, the DAX made its all-time high when the U.S. market sold off. The DAX sold off. The CAC sold off. The JPN sold off. The NIC. Everything moves with the U.S. markets to one degree or another, sometimes with a lag, sometimes with a lead, but just understand that. So you want to see if the DAX holds 15,683. You're struggling. You need to get back above 16K to get more bullish here to come back up and challenge this, okay? So right now you're in basically a very large Wyckoff range. You try to pivot out to the upside. You got to get above 16,446 to have a lot more upside potential to 16,989. We'll see what happens. Again, all tied to the U.S. CAC, same thing. Try to exit Wyckoff. Got your pivot. Let's throw a fib on here so you can see this. My French traders. And let's look at this here. 618-7232 is exactly what you bounced off of. Key support here, 618-7232. Remember, you flip it, more potential for reversal, and then you look at the base of your Wyckoff down at 7,083, which would be an almost 200-point drop from where you are. So everything is tied to where the markets are. One more thing to show you. I said it would be short. I lied, okay? One more thing to show you. Talking about a recession, let's look at where the indices are trading as of July 28th. So this is a prior 12 months. S&P was at 20.42, trailing 12 months. You see that? And the prediction for the S&P moving forward 12 months, 20.97. Why is that significant? Do you know where the market historically trades in a recession? What the PE is? 12 to 14. 12 to 14, at least a 33% decline from where we are at. This is how far off estimates are and where we are in the business cycle. And this is why these business cycles, recessions, bubbles sneak up on everybody because they don't pursue the knowledge to see the matrix. Everybody have a fantastic weekend. I'll answer your questions and comments as always. Consider joining our room, like and subscribe to the video. Talk to you guys Monday. Take care.